Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Saturday, May 27th, 2023. And welcome back to the Crypto Overnighter, where we have no sponsors, no agenda, and no BS. But we do have some news, so let's get to that. Investment firms in the EU that offer both traditional financial products and cryptocurrencies may be misleading their customers. That's the concern of the European Securities and Markets Authority, or ESMA. They're concerned that some firms might use their regulatory approval for traditional finance to make customers believe that they will receive sound financial advice where cryptocurrencies are concerned. EU rules like the Markets in Financial Instruments Directive ensure that investment intermediaries only promote appropriate financial products to clients. Those rules do not always apply to more unconventional investment opportunities like gold, real estate, or non-transferable loans. The introduction of the EU's Markets in Crypto Assets regulation will bring this style of rule to the crypto sector. However, it will take around 18 months for the regime to come into effect. In the meantime, ESMA is concerned that some companies are going to take advantage of the ambiguity and encourage misleading practices. ESMA recommends that investment firms take the necessary measures to ensure that clients fully understand the regulatory status of the products or services that they receive. Firms should also clearly disclose to clients when regulatory protections do not apply, and they should not use regulatory approval as a promotional tool. ESMA has previously cautioned about the risks associated with cryptocurrencies and highlighted novel threats such as hacks and consensus manipulation. The agency plans to soon seek public input on dedicated secondary laws that will implement MiCA. So ESMA issued a statement reminding investment firms to inform their clients about the regulatory status of the products that they offer. ESMA emphasized crypto assets and reminded companies that crypto remains unregulated in most jurisdictions despite forthcoming regulation. ESMA stated that until the Markets in Crypto Assets regulation is in effect, crypto assets offered by investment firms will continue to be unregulated. ESMA expressed concerns about the risks associated with the unregulated products and services, including prudential and investor protection risks. The financial watchdog believes that clients can be misled regarding the level of protection that they receive. Additionally, ESMA urges investment firms to consider the impact of unregulated activities on their business when developing risk management policies and systems. Meanwhile, crypto firms are expanding their presence in Ireland as they seek to grow their businesses in Europe. Now, last night we were talking about Gemini, and they're going to come up again tonight in a bit, but they've already chosen Europe. They chose Ireland as their European base. Founder Cameron Winklevoss said that it serves as their entry point into the EU. And also Kraken, they're preparing to expand operations into Europe. Their subsidiary in Dublin recently received authorization as a virtual asset service provider from the Irish Central Bank. Now, from the EU's call for transparency in the crypto market, let's shift our focus to the European Central Bank's recent findings on the digital euro, because it is a CBDC alert. The European Central Bank released a summary of its findings from the digital euro CBDC prototyping exercise. This exercise aimed to explore various aspects of the digital euro, including offline usage and interoperability with existing payment systems. The project was part of Eurosystem's preparations for a potential pilot launch of the digital euro later this year. It took place from July 2022 to February 2023. During the exercise, Eurosystem developed a centralized settlement engine called Next. Now, I say Next, but it's like all in capital letters and there's a euro sign instead of an E, so whatever. But it utilized an unspent transaction output, UTXO, data model. Private companies provided 5 prototype customer interfaces representing different use cases, and self-custody wallets were also tested, and ensure settlement finality and non-repudiation. It concluded that existing technology may not be capable of developing a production-ready and secure offline solution in the short to medium term, 5 to 7 years. Nevertheless, this exercise demonstrated that online and offline digital euro prototypes can achieve interoperability despite employing different data models and technical designs. Alongside the exercise summary, the EC published a Market Research Outcome Report on the digital euro. The report acknowledged that offline solutions compliant with Eurosystem requirements would be innovative and might introduce uncertainty regarding their readiness. According to the survey respondents, near-field communication, Bluetooth interfaces, and QR codes were favored for offline transactions. The market research covered 12 technical aspects crucial to the potential rollout of the digital euro, such as proxy lookup and dedicated cash account management. While the European Central Bank is exploring the potential of a digital euro, let's take a look at the role of stablecoins in the crypto market. Takeshi Chino is the general manager of Binance Japan, and he recently shared his insights on the topic. So, Takeshi Chino recently discussed the significance of stablecoins in an interview with CoinDesk Japan. He referred to stablecoins as the glue that connects the economy with the blockchain. He explained that while the volatility of cryptocurrency prices can create profit opportunities, it doesn't contribute to the broader demand for crypto assets. Stablecoins do, because stablecoins are designed to be less susceptible to price fluctuations. In recent months, Coinbase and Kraken have both withdrawn from the Japanese market, citing unfavorable market conditions. Chino acknowledged that the ongoing crypto winter has affected the traditional model of crypto exchange businesses, as lower valuations and trading volumes have reduced fee revenues. However, Binance's vision of promoting freedom of money through crypto and blockchain technology goes beyond the limitations of the exchange business model and current market conditions. Chino emphasized that Binance aims to provide various services related to finance and intellectual property in the form of Web3. He believes that diversifying the ecosystem and approaching the market from different angles will contribute to the growth of the company. Binance's return to Japan this summer comes 2 years after the exchange received a warning from the country's financial services agency for operating without a license. Chino recognized the importance of regulatory acceptance in Japan. He acknowledged the challenge of ensuring understanding and trust in Binance's products and activities. Now, while Chino expressed confidence in Binance's product and technology, he acknowledged that there is a long way to go in terms of gaining a comprehensive understanding of the company and its operations. Now, as we delve into the importance of stablecoins, let's not forget the ongoing legal battles in the crypto world. Gemini and Genesis Global Capital are currently dealing with a lawsuit from the Securities Exchange Commission. Let's take a closer look at the case. Cryptocurrency exchange Gemini and bankrupt crypto lender Genesis Global Capital have both filed a joint request for the dismissal of a lawsuit brought by the SEC. The suit alleges that Gemini Earn violated securities regulations by offering unregistered securities. Now, both companies argue that Gemini Earn should not be considered a security. Genesis asserts that the transactions were simply loans and has asked the court to dismiss the complaint or alternatively strike the SEC's requests for a permanent injunction and disgorgement. The lawsuit also claims that Gemini, and not Genesis, was responsible for the customer-facing aspects of the Earn program. Now, Gemini, acknowledging its role as a transfer agent for Earn, criticized the SEC's lawsuit as ill-conceived. Now, as a result of this suit in January, Genesis filed for bankruptcy, leading to withdrawal restrictions for Earn users since mid-November 2022. In response, Gemini has filed a comprehensive claim seeking to recover $1.1 billion in assets for 232,000 Earn users on Monday, May 22nd. Gemini and Genesis' parent company, Digital Currency Group, are engaged in mediated negotiations to reach a restructuring and settlement agreement. Although a preliminary deal was proposed in February, it has not been finalized. And DCG recently missed a $630 million loan payment to Genesis. Simultaneously, Gemini and other creditors are working together on an amended plan of reorganization. This plan can be pursued independently if the mediation process fails. The aim is to achieve the best possible outcome for Earn users, as stated in Gemini's blog post. While the legal landscape continues to evolve in the United States, let's turn our attention to China. Beijing has recently released a white paper on Web3 innovation and development, signaling a potential shift in its stance towards the crypto industry. Beijing released a white paper on Web3 innovation and development. The goal of the paper is to promote the growth and advancement of the Web3 industry. The document emphasizes that Web3 technology is the inevitable trend for the future development of the internet industry. The white paper was published by the Beijing Municipal Science and Technology Commission. The Commission's objective is to establish Beijing as a global hub for innovation in the digital economy. To achieve this, the Chaoyang district of the city plans to allocate a minimum of 100 million yuan, around $14 million, annually until 2025. Yang Hongfu is the director of the management committee, and he shared this commitment at the forum. The white paper sets out Beijing's goals to enhance policy support and to accelerate technological advancements to foster the development of the Web3 industry. The timing of the white paper's release has drawn attention. Binance CEO CZ remarked that it is interesting, considering that Hong Kong's crypto regulations will take effect on June 1st. The Securities and Futures Commission of Hong Kong recently introduced a new rulebook for the crypto industry. This allows retail investors to trade cryptocurrencies starting from June 1st, coinciding with the implementation of a new licensing regime for crypto platforms. Now, while the United States is currently implementing stricter regulations on cryptocurrencies, Hong Kong aims to attract crypto firms to the region. China banned the use of cryptocurrencies in 2021, but with the release of the Web3 white paper, it might be signaling a potential opening to the industry to some capacity. Notably, China Central TV, the state broadcaster, aired a segment about cryptocurrencies earlier this week. That segment featured the Bitcoin logo and showcased a Bitcoin ATM in Hong Kong, along with the option to buy Bitcoins. The coverage also highlighted NFTs. However, the segment has been removed since then. But even though the segment was removed, that's pretty significant. Historically, that kind of coverage has led to increased market activity. Now, as we see the potential shifts in China's approach to crypto, let's end with a surprising twist. Peter Schiff, well-known Bitcoin hater, recently unveiled a collaborative NFT project on his own. Let's explore this unexpected development. Economist and crypto skeptic Peter Schiff is known for criticizing cryptocurrencies like Bitcoin. He surprised the crypto community by unveiling a collaborative NFT art collection on the Bitcoin network. The reaction to this announcement has been mixed. Some are amused, some are baffled, some are even welcoming. Others point out the glaring hypocrisy. Schiff introduced the Golden Triumph NFT collection via Twitter. The collection was created in collaboration with one of his favorite artists using the synonym market price. It includes an original painting called Golden Triumph, along with 50 prints and 50 digital versions. And those are inscribed as ordinal NFTs on the Bitcoin blockchain. Now, the physical painting depicts a human hand holding a bar of gold. It's created on an oil linen canvas. The prints are on archival paper and they feature the same image. The digital versions are unique NFTs that are associated with the artwork on the Bitcoin blockchain. The Golden Triumph collection will be auctioned in two parts, from June 2nd to June 9th. The highest bidder for the ordinal NFTs will receive the number 1 of the collection. The next 49 highest bidders will receive numbers 2 through 50 in descending order. Now, it's worth noting that Schiff's involvement in NFTs does not in any way indicate a complete change in his stance on Bitcoin. However, he seems to recognize the use case for blockchain technology in providing verifiable ownership of assets such as art through NFTs. In response to a tweet questioning the value of inscribing gold on Bitcoin while considering Bitcoin itself to have no value, Schiff affirmed that it was valuable to put inscriptions on Bitcoin, but maintained his view that Bitcoin itself lacks inherent value. Schiff has previously criticized NFTs. He's described them as fake assets in a blog post from March of 2021. He argues that NFTs only offer ownership of a digital image that can be replicated endlessly online without providing control over the access to that image. Interestingly, Schiff's change in sentiment regarding NFTs follows a similar pattern seen with the former United States President Donald Trump. Trump has been a vocal critic of cryptocurrencies, and he surprised many when he became involved with NFTs by launching the Trump Digital Trading Cards collection in December of 2022. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.